Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today. Hello everybody, so this video is about correlations. We're going to look at commodities, we're going to look at the dollar, oil, and we're going to look at it compared to SPY. So there's an interwoven web of correlations going on in the market. I am constantly watching SPY and the S&P 500 when people ask me about individual names because we see that correlation time and time again with those big individual names with the overall market. Now, low caps have less of a correlation, newer IPOs have less of a correlation, but in times of high volatilities like the past couple of days, the correlation to the overall market is very strong. And to see that, all you need to do is look at a daily chart. Look at SPY the last 3 days, big red, gap down open, big green, recovery, lower wick. And then you just compare it to all of these candlesticks. Any major name, they are all the same. And the ones that aren't the same certainly stand out. But time and time again, you see these candlesticks so very similar. And it is because high volatility, those algos, we're talking algorithms and computer systems linking up and trading hand in hand. So what I want to point to is that the dollar is driving the market. It's driving commodities and the market together. This is the daily chart on the dollar. We did get a bullish break from this downtrend line. I'm not convinced. This is the heads up that the bulls are in control, but I want to see a break of 96.25 to break the lower high pattern on the daily. Now, last time we were at 96.25, that is when gold was down at 13.05. So if we break that level, we can anticipate gold will likely break 1300. And that is because we have a strong correlation between the dollar and commodities. Dollar strength means commodity weakness. So a strong dollar means weak oil, it means weak gold, weak everything. Natural gas is not really seeing as significant an impact on the dollar. And that's the important thing. The correlation strength changes from day to day, and it even changes throughout the day. So I will highlight some examples of that, and that's why it's important to always be watching everything and comparing their shorter term charts together. So what I'm going to be looking at, let's just zoom in here on the dollar and see that very clear bullish break today, clear move to the upside. So I want to compare first off, well, let's compare gold and the dollar. So let's see, this big bullish breakout began occurring at noon and just 3 big candlesticks ripping to the upside. And let's now look at gold on the hourly. What happened at noon? 3 huge dump candlesticks, exactly inverse to what was going on in the dollar. Let's look at oil. Where is oil? Oil's on my other screen. Okay. So oil, let's go into the hourly chart. Let's get those 3 candlesticks after noon, see what happened there. And there's noon and then 3 red candlesticks. So that's not what I want to point out here on oil. Let's now look at oil compared to SPY on the 5-minute time frame and the correlation there. So here is oil at 9:30 a.m. when the market opens. Look at that SPY green candlestick first thing correlating with that strong green candlestick. What happens then? Huge oil dump. 1, 2, 3, 4, 5 red candlesticks in a row. 1, 2, 3, 4, 5 dump candlesticks. Then we have a green candlestick. Why do we have a green candlestick? Look at the 6th candlestick here, green, then red. Green candlestick rejected, red. So extremely strong correlation right out of the gate. And oftentimes I'll see that correlation weaken after the first 45 minutes of trading or so. And then throughout the middle of the day, I'll see it completely separate. Today, that was not the case. And I'll show you here the end of the day, very similar action. But you cannot deny how strong this correlation is when each 5-minute candlestick is lining up on the S&P 500 and on oil. So let's now zoom to the end of the day. And let's see here, let's switch screens so we can make it easy. We'll put SPY over here so we get the end. Bear with me. And pulling back up oil. So the end of the day bounce that SPY had. This green candlestick, let's see right here, 3:15 p.m. before the bulls showed up. Where are we here on 3:15 p.m.? Right here. So we see 1, 2, 3, 5 candlesticks in a row to the upside. 1, 2, 3, 4, 5 candlesticks in a row. Big red candlestick pulling back. Big red candlestick pulling back. Strong move to the upside and then a dump. strong move to the upside, and then a dump. These candlesticks on the 5-minute time frame are going tick for tick with oil. So if I'm trading Netflix, Netflix is strongly correlated to SPY. SPY is strongly correlated to oil. Oil is strongly correlated to the dollar because it's a commodity. So it's kind of hard to get a whole grasp on these things. And this is why traders have 8 screens and they're watching all of these correlations at once to see the strength. And I was watching oil at the end of the day, and I knew after hitting 45 psychological resistance and pulling back, I knew that if we broke $45 to the upside, we were going to see SPY break the lower high pattern and break the recent high, which it did right before that little end of the day dump. So what this all boils down to is the action today in the S&P 500 doesn't give us a whole lot of guidance into what to expect for tomorrow. So I'm looking to oil. I'm looking at the hourly chart and seeing this base forming at the low of these hourly candlesticks, 44.73, 44.76, 44.88, 44.80, 44.77, 44.80. You get the idea. 44.80 and the high 70s is a very strong support level that the bulls are trying to bounce off of. The bulls need a bullish MACD cross. We have a bullish reversal doji on the 4-hour, and actually by the end of the day, it is no longer a bullish reversal doji. Those last couple minutes dump ruin that candlestick for the bulls. But keeping an eye on that hourly time frame for a bounce to develop, and I think that this is going to be a very strong indication of what to expect tomorrow. Now, oil was down 2% when I woke up this morning, and the market was down 0.6% with that lower open. So I'm going to be watching oil and this 44.73 level extremely closely. If we break 44.73 overnight or tomorrow, we're going to see a gap down open or a break of the low of yesterday in SPY and continuation for the bears to the downside. So oil is running the market, in my opinion, watching that strong correlation in the morning and afternoon, and oil is being run by the dollar. So in my opinion, it all goes back to the dollar, and need to be watching that on shorter term time frames as well. So this is just a glimpse into the light bulb going off in my head recently, and the interwoven algorithms all trading interconnected in the market these days. And oil is extremely important to know what to expect heading into tomorrow. I appreciate you watching. Feel free to leave any comments you have on the subject. Have a great night.